Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Yesterday, although the daily excess that we had at all-time highs left on Tuesday was confirmed, the market quickly went back into Tuesday's range and pushed for most of the day towards the all-time high. So we clearly have a market which is in a consolidation form despite having like a medium-term trend. As I mentioned yesterday, I think, and this is my personal opinion, that this trend is in its latest stages, given the amount of continuous consolidation that you have after each push towards like a new step. Nonetheless, well, we are still like pointing up on the larger time frame. No change was recorded yesterday. We traded within the established range for the week on Monday and Tuesday. So let's see what we get today. Here in the continuous chart, you see a very interesting picture. Let me make that bigger maybe, which is that you had a clear channel that you were pushing, and now you see how you deviate from that original steep pace, and you are more into a consolidation phase. And this consolidation phase could take a while. It's the market waiting for new information and new developments. Yesterday there was some pressure midday when some reports came out that the trade negotiations are facing some issues with the Chinese refusing to buy the agricultural products that the US is requesting. That put the market under pressure. But my take is that no sellers, like strong sellers, came into the picture and the market bounced back. Now, if you look at the market profile, this is the drop on those news. Notice what happened here. What happened here is that you have a strong push from the open back inside range, and that tail, that excess left on the A period was left untouched for the whole session. If you go that strongly and go through the value area like you did, then you have a pullback, and then you manage to approach the highs again. That should be enough to extend the highs. And you can see that towards the close. Number one, the highs were not approached. Number two, we settle inside the already established range in the morning. But number three, on the overnight, you had a flush of that area and you have a very prominent POC down below at the 92 area. This tells me that probably there's not enough fuel to get there. The regular trading hours today will confirm or deny that. So the focus for today is value development relative to the value established on Wednesday. Any acceptance below the afternoon pullback will denote change and will increase the odds of our rotation back down. If we establish value here, it's basically no change. But I think that given the structure left on Wednesday, no change is not a positive development, because with this type of buying tail and this type of reapproach of the high, this should have been like taken care of. So not being able to go past this 97 area and this settlement area, at least in the short term, gives me a sign that the market could be pushing too hard, like trying to get there and not getting it. So potentially getting too long, create an inventory imbalance, and you have the risk of a rotation down. That's moving maybe too far ahead of, let's see what the market brings, but that will be my focus. My focus is value relative to this value that we established here, and assessment of the potential continuation of this late session move, which if I don't see, that will be an indication that the market is not strong enough. let's see what we get. Also, remember that now we are having all this impeachment information during the market, and a negative one or a positive one. I mean, I don't see anything positive coming out of this, at least immediately. But any relevant news coming out could move the market. So trade well, manage your risk. Remember, odds are just odds. Uh, don't try to anticipate the market reaction, but wait for the market reaction and assess it.